Well, hello folks, I'm Melly Little and this is your weekly NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened last week. What does it tell us about the coming ones? I do this show every Sunday night live at 9 o'clock Eastern Time and archived on YouTube under the channel LA Little. You can catch me there for the weeklies and the daily wraps. Monday through Thursday we do those here, same time, same place. You can catch those for a little more granular view. As far as the macro view, last week, nice big gains again. That's 2 weeks in a row. As you know, this market has worked pretty much straight up. 2% gains, 1.5 to 2% gains across the board. You got some pretty good yearly gains in the NASDAQ and the S&P. The Dow and the Russell continue to lag. Russell still remains underwater. As far as the markets, if you take a look at the market sectors, the qualified trends, you can see that you're starting to get transitions again back on these time frames. And what I'm talking about here is the time frames, the short-term time frame. You're seeing the bullish trend on the NASDAQ, right? That one's already flipped around. You got a sideways one on the S&P. IWM hasn't broken yet, neither has the Dow, so those are still underwater. But if you look over here, financials bullish, right? You've got technology bullish, you've got consumer discretionary bullish, healthcare bullish. Once you get 2 or 3 of these to start turning, and we had gotten to a couple of them here on the sideways trend on the intermediate term time frame to change, but we didn't get another one. We didn't get any kind of continuation on the short term. Now, rather than all being bearish, which is pretty much what they were, now you're starting to see them flip around, and there's enough of them now to suggest that we're going to see more of them flip around. So short term, just looking at qualified trends, it looks as if this market's going to try to head higher. So that's a short-term view just based on qualified trends. Let's go to the charts. Let's take a look here at the markets. We'll start with the S&P. S&P on Friday, it had gotten over on Thursday, changed to sideways, and had pushed above that swing point high. Friday it does an immediate retest, regenerate off that swing point high. And so when we look at it and draw the lines across, you can see there's the test, comes right back in, tested immediately, gets under it, back over it. Looking at the volumes here and the volumes there, not enough to break it down. This thing's going to simply flip around and try to go higher tomorrow. That's on the daily. If you look at it on the weekly, you're back over the highs. Right? Top of it was 1991, you close at 1988, so you're back over the highs. You don't have quite enough to stay over it given the Friday pullback. So we'll see if this thing can extend. So daily looks like it wants to go higher, weekly attacking the highs with a little less volume, but given the daily it does look like it's going to try to trade higher. That's the broad S&P, but if you look over at the strength, that's in the NASDAQ and it's in the NDX, those just continue to hug this line and start heading higher again. We actually had reversal setups, 2-bar reversals after an extended move, but I guess it's not extended enough because neither of those triggered failures to trade back lower, volume tailing off, price going up. That's on the daily. Looking on the weekly, you actually got the breakout over the swing point high. Suspect, volume's not quite there, a little bit light, but it is a breakout. So you have a breakout there. You had the breakout back here on Monday. That's multiple time frames, multiple swing points. That usually says you're going to try to extend 2 to 3 bars on the longest time frame, which is the intermediate term. So that suggests more up to come. Looking at the NDX, looks pretty much the same. Also had 2-bar reversals, didn't trigger. All you did was go sideways versus down. and had a doji on Friday, no volume to speak of. If you look at it on the weekly, over the highs, going higher. I don't see anything there to stop it yet. Flipping to the weakest on the Russell, which is still negative on the year. Russell actually is trying to trade higher again. You had an ABCD structure that was in place that finally triggered last week. That should take us up to about 1971. But now inside that you have the potential for another ABCD structure that could take you up to about 77. So the zone is shooting for is up here. That would be over this swing point high and potentially over that one. So Russell starting to set up to try to go higher. Looking at it on a weekly, could still argue this is an ABCD structure on the way down potentially, but at this point it hasn't made a C point. So from that perspective, you simply have to wait. And if you look at it from the different perspective, which is the range trade, it's right at the range point. It's going to try to break it, get back into the top of the range, and that's where we sit right now on the Russell. So trying to get back into the top of the range. If it does, it's probably going to try to go all the way back up at least to that breakdown bar, potentially the highs again. Now there still is kind of a double high sitting out here, right? You went up, you tested it, you failed, you came back, but you kind of made a higher low, and if it extends for 6 bars, that will print as a low. But right now it's just range trading and trying to get into the higher range. So the Russell, even though it's the laggard, it actually has, you know, near-term bullish setups in play. If you look at the major sectors, right? If we flip over, take a look at those guys. On the major sectors, you actually have some of these sectors that continue to push higher. The SOX is one of them. I mean, this was a major breakdown, and now there's no volume, but it's a major move right back to the top side, and it's going for this breakout bar, breakdown bar. 87.85. It's so close now, it's kind of hard to believe it won't try to hit it. That one has transitioned to a sideways trend and going up to try to hit the breakdown bar. And I'm going to highlight the strongest ones first. Next one is the XLF. XLF actually got a breakout on Friday. This thing pushed higher, got over 2 swing point highs. It did do an over-under on Friday, so on a Friday it looks like it's going to try to pull back, but if you flip over here, you got a breakout confirmed on the weekly. That suggests 2 to 3 bars higher because it's multiple time frames, multiple swing points. XLF actually looks like it's going to try to trade higher off that push. If you look at the XLY, it's kind of the same setup. Multiple swing points here. You get over it, you go over, back under, a little less volume. That one also argues on this time frame, short term, it's going to try to pull in a little bit. You flip over and look at it on the weekly though, you actually have a breakout over another swing point high and you have volume. So again, multiple swing points broken on multiple time frames, and yeah, it's extended. It should try to extend 2 to 3 bars. Now the extension 2 to 3 bars, and I've said this before, but not everybody has been around all the way. It could be that simply goes like that. It doesn't mean that it has to go like this, right? On a strong market that's not extended, you will see this kind of behavior, right? You just kind of keep going up for 2 to 3 bars. On a market that's got mixed signals and extended, which we are here, you may see more of a sideways move and then potentially an up move after that. So, even though these are strong and even though they should potentially push higher, they've already done their 2 to 3 bars here, right? And the XLF's trying to do it. And, they could pull in after that and then by the end of the week be pushing back up. So, realize when you're talking about the weeklies, you can get a lot of movement and still be heading higher, even though on a short-term basis you could actually come back in some. The other one that's strong, or very strong, has been the XLK. That got over a swing point high. on Thursday, does a doji on Friday, has a little bit more volume on Friday compared to Thursday. That one can test higher again tomorrow. And then if I look at the rest of them, most of these others simply look like they're going to try to trade back in some. Some examples, XLB, right, goes over the high, back in, has no volume, probably sort of hang there, maybe trade back in a little bit. XLE's another one, got over the high, couldn't hold it, trades back in on Friday. XLI is another one. This one was the weakest for a while. This one comes all the way back up, tests into that swing point high, fails to stay up there even though it broke over it, now fading back in some. Those all, they look like they could come back in. So you have a couple, 3 sectors that are going to try to push higher. The other ones look as if they're wanting to try to pull back in a little bit. On the world markets, this view of the world markets is about what it's been for a while. FCHI, which is the CACs, pulled into the major resistance zone. Let me get my cursor. That swing point, or that zone, was here, right? Got over it on Thursday, back into it on Friday. The bar it's coming into is a retest, regenerate. So you test into it, and now you're trying to regenerate lower. That's the CACs. The DAX, not quite as strong in terms of the swing point low. Came into, in this particular case, came into that resistance area finally, which was heavy. Goes into it, trades back under it. This one will probably try to pull back in as well. So you've got CACs, the DAX, really struggling here to get higher, and the FTSE, stronger economy, but interest rates potentially going to move up. That one does look like it's still going to try to trade up to that swing point high, but you may get some sort of a pullback just because of the rest of Europe. If you go overseas, Asia-wise, right, you got the Hang Seng 8 shares trading on the Hang Seng for China. It pushed into, with volume here, this high of this low. I wouldn't be surprised to see it try to come back in there before the week is out. And if I look at Hong Kong itself, hanging at the high, still over that swing point high. That was 24,912, and they tested into it a couple times already. So or actually one time. So we got a retest, attempted regenerate. That's 14.6 coming back into 25. That looks to me like that will try to regenerate higher. So Hong Kong fairly strong. 8 shares may come in a little bit more. And then if I look elsewhere, I don't see all that much strength. Taipei is the next strongest one, pushes up, but it's just finished off an ABCD structure, so we may not see much more out of it on this particular leg. That ABCD structure is there, and coming in doing a swing point, retest, regenerate off of this bar. So that one's probably going to find resistance now and potentially try to regenerate lower. And the Nikkei is the other strongest one. Nikkei pushed up, back over. That's a 2-bar reversal. Let's see how that one trades tonight if it trades back in. So Asia's still strongest, Europe still weakest, us breaking out in some sectors and in some indexes, and definitely trying to push higher again come tomorrow more than likely. You've also got the fact that it's a Labor Day weekend, which tends to be a bullish event for the markets. Not Labor Day itself, but just the shortened, or the holiday weekend being longer this time. It's off, the markets are closed on Monday. And if you look at the economics, there's a lot of data coming out in the U.S. economically. We already know that the economy seems to be heating up, so economics still look good, or certainly seem to be supportive. The Fed so far, we had the Jackson Hole event last week, so far is not giving in and suggesting they're going to raise rates any sooner than the market expects. The technicals from a neoclassical perspective still look as if they can push higher. And so all in all, when you look at it, I think next week is going to be a little bit more mixed, but still the bias is to the upside. It doesn't look like it's ready to really pull back in, and if it does pull in a little bit, it's probably going to be bought right away. So that's kind of the synopsis on a longer term perspective. That's the way these markets look like they're going to try to trade mixed to higher again this week. So if you have questions, I'd be happy to take them. Of course, you can reach me 303-912-9110 with text messages. You can support at tatoday.com, or you can have a live stream. If you have a live stream login, you can type in the live stream and I'll take those questions there. I was looking at some of the stronger sectors outside the major ones that I typically look at, and I want to kind of focus a little bit now on those, and let me get them up here. Here we go. Because there's some of these that are truly pushing and pushing hard. The biotechs have been definitely one. Nice big push. Now this is the broader, the biotech ETF. You know, it's not overdone on the upside. You know, the MTTFs are relatively, let me click and bring those up, are relatively benign, 10%, 23%. So, you know, that can certainly move higher. You actually have an ABCD structure that can move this higher as well. And so, you know, when I look at all of these, and here's your ABCD structure. So when I look at all of these, you know, this could get a fairly large move to the upside potentially. And I see that there's some activity tonight with Roche coming in and wanting to buy out, I forget which of the biotechs. That's probably going to put more juice in these again tomorrow. So the biotechs, from this perspective, you know, they certainly look like they're set up to try to run higher. Now that's the BBH. If I look at the IBB, which is also another view, different set of stocks, this one just finally got back to the highs, got over it, broke out. It's doing a retest regen. The low off that high, 263.24. You got down to 263.05. So that's a full retest. Does 576. You had 612 over here. It doesn't have the volume. That also suggests this thing's going to flip around and try to move higher. And if it does that, just like the BBH, it's going to set up an ABCD structure to the top side. Very small pullback that could get a nice big run to the top side. Biotechs, of course, help the NDX. So that's a big bonus for that NDX, which refused to come back in last week when it had a chance. Another sector I've been watching is the broker-dealers. Broker-dealers pushing back up to test the highs. If you look at it on the weekly, they're coming back up into this resistance zone. Also, they look to do some work, some more work to the top side. Real estate. Real estate had broken out, pulls back, but the volume on the pullback, as you can see here on the daily, lighter. That also looks like it's going to try to flip around and head back up. If you look at it on the weekly, you actually have ABCD structures again now in place to trade this thing higher, and it's from here, there, and up again. So real estate also looks to go higher. So there's a number of sectors that are not just the majors that continue to look strong and continue to push to the upside. On the weak side, it's still those connected with oil. Here's the OIH. We saw the XLE before. OIH doing the same thing, struggling to get higher. This one is finally setting up what looks to be some sort of a base to try to do so. It had 2 good days of push to the top side. You're fading back in it with not a lot of volume. If anything, this looks like it will trade sideways and then to try to attack that high again. So OIH, XLE still struggling, but you know, maybe the OIH is trying to turn. Some of the others, social media, up at the highs. Here's the daily. You can see it breaks out, gets over the top, and if you look at it here, ABCD structure in place to take this one higher and back to the highs is what it's going to try to do. So you can draw that in, you can push it up, and it takes it almost back to the highs. So social media still looks good. And then finally, if I switch over to TAN, which is the solar, coming back up to test the highs, straight up move again, just like so many of these. The highs it's coming back into is this swing point high. If it gets over, it's going to be reaffirmation, which suggests this thing will go right back to the top again. So when I look at the sectors do not look that bad. You know, those that are outside of the, you know, the main ones that we're always looking at. A couple that, you know, let's look at two more while we're still in here. Regional banking, not nearly as strong as XLF. So the major banks have already broken out, but you don't see it on the regionals. And that's interesting to see. You know, and if I look at it here on this time frame, this looks more like the Russell than it looks like the S&P, which is what the XLF is suggesting, you know, is mirroring. And then if I look at the insurance sector, this one is making a pretty good run, getting back up to the highs, got over a swing point high finally. It had done a full retest and had failed, which suggests a range trade, but the range trade looks like it's going to try to get all the way back up to the top. Two other sectors that have been strong, GDX and the silver, the small cap gold miners. This is the large caps. There are 3 swing points set up in a row down here. If this does start to break, there's not a lot underneath it to hold it up. So there's really this area that needs to hold. If it doesn't, the miners could be in for a drop again. And if you look at the small caps, which are quite a bit more volatile, you got your lows here. I'll draw it on the bars themselves. Right, that is the critical area. Same sort of thing. Because if you get past that, there's really nothing until you go quite a ways down in terms of percentages. So a big week probably coming up for the gold and silver miners. All right, I think that gives you a pretty good view of where things are. I do believe you're going to see this market play mixed to higher again this week. And after this week, you know, the slow summer trading is basically over, and you should see everyone coming back to work after Labor Day for the next big push. September, October, some of the worst months for the market. Will it be true again this year? Actually, September is probably the worst month if you look in the Trader's Almanac. October can be big either way. But we are coming in. We've had another big run into it. Looks to me like this week's going to hold up, and then it will be a question of, okay, how do we set up for the next week? You know, is there going to be geopolitical? Is there going to be bad economics? Is there going to be a hint out of the Fed? You know, the Fed meets on I think the 17th and 18th. Is that going to be an issue? You know, what is going to drive this market the next time? I think it's the 16th and 17th is the Fed. So that's roughly, what, 3 weeks away. It's not that far away. Okay, folks, I don't have any questions tonight, or at least it doesn't look like it. Let me check and see here to make sure. I don't see. Oh, I do have a question. Let me take this one in. So, question about CRM. Let's take a look at this. So it's kind of a long question. Let me kind of read this through as I pull up the stock, and we'll take a look at it together. So CRM, and what do we got here? Looks like I got a text message as well. So 2 of them to look at. Let me put this one in as well while I'm putting them in. SVXY. All right, let's look at CRM first. So CRM, question here is looking at the daily and weekly. I want to know if this is a good place to buy some shares. It just had earnings reported on Friday. It rose over multiple swing point highs on the daily, over 2 swing point highs on the weekly, with good volume on daily and weekly. Nice analysis on Friday, same day breakout. Blah blah blah. Would I anticipate it coming down? Do I anticipate it coming down? Okay, so let's see what we got here. So here's the daily, right? Earnings came out on Friday, had a nice big spike up, gets over 2 swing points, confirmed. Nice trade. Weekly, same thing, right? Gets over 2 swing points, confirmed. Hits into resistance, and if you look over at what that resistance looks like, it's really, this is what you're looking at. Anytime you go into a resistance, you want to see what it is. It's coming into this bar. Now look at what it did coming into the bar. Does more volume as it comes in, slightly more volume. So that's going to attack it again. It's not done. It did pull back a little bit because it had a huge move, right? So from that perspective, yes, it made sense for it to pull back some. So you got up as high as what, 61.01, you close at 59. How much deeper is it going to come in? Well, because you've broken over multiple swing points on multiple time frames, it's probably going to carry 2 to 3 bars. This one could give you an immediate retest regen here tomorrow, or it may simply gap up and not even give the retest. And it doesn't have to give the retest because it's so strong on multiple time frames. Yeah, this one actually, for the viewer here, this one actually showed up on our trading signals that got updated today. So I know that you're trying out the system. You say that here as you're commenting. If you pop over, and I'm going to the front menu here, if you pop over to our tools, come down to the watch list, and if you go into the watch list, and you'll have my shared watch list down here, and the one you want to look at is either the earnings or the trading signals. I think it showed up on both of these as bullish. So that, yes, I've already marked it as bullish for you, and yes, your analysis is correct. This is going to go higher. How cheap can you get it is the next question. I don't think you're going to get much more than maybe 58.62, maybe this high. Probably not going to get to the bottom of that low, of that the low of this high. So maybe 58.5. You may not get as even the 59.5. That would probably be the trade. So that's where I'd be looking to get in. And we could actually look, if you want, I'll look intraday on it and see what it traded like on Friday, which would help. Put it on a 10-minute, top of this bar, 59.50. That's where it's going to try to get to. And that is the top of the prior swing point high. That's probably the best price point you're going to get. Okay, that's CRM, and it is a buy. Next question is SVXY. This was asking me Friday or Thursday, I think, Wednesday or Thursday, and I think I messed up on the analysis. So let me try this again. So this is the VIX, short-term futures, and it's a short on the VIX. The VIX is telling if volatility picks up, the VIX goes higher. If volatility comes in, it goes lower. So if you're shorting it, then you expect volatility to pick up. Let me think, hang on. If you're shorting it, if you're shorting it, you expect volatility to die down. So you don't expect volatility. So either the market's going to be quiescent, just kind of sit there, or it's not going to move big either direction. So coming back to this now, is the volatility going to, I guess the thing that always confused me the last time I looked at this is why did it rise here so much? Oh, it rose so much because the market was going up. And this is a short of that. So it's just sitting there the last few days because it didn't go anywhere. And volatility is just sitting still. So if volatility picks up, this thing is going to well, I guess that's my confusion. Volatility doesn't have to pick up because price goes up or down. I mean, because price just goes down. Volatility can pick up because price goes up as well, right? Just if it moves in big ways. Typically, let me do this. This will probably make it easier. Let me look just quickly. I got a couple seconds here. Let me look at VIX. So this is going down, right? That makes sense because this one's going up. So the volatility's coming down as the short is going up. So you're expecting volatility to decrease, which would increase this. And I'll quit looking at this because it's confusing me. Yeah, so if that's true, if the bias is slightly up, I don't think you're going to get a big move here, and that's what I said Thursday, and I think that's still true. You may get a little bit more move to the upside, but I don't think you're going to get a big move. If anything, there's probably a little bit more risk that this thing just simply goes sideways than up or down. I don't think you're going to get a big move here. So for me right now, I don't see much to do with this. Yeah, I think you're going to go sideways still. Maybe a little bit more upside, but not a lot. All right, I'm out of time. Thanks a lot. Appreciate it. I will see you next time. And until then, I'm LA. Take care, and I'll see you next time.